Ladies and gentlemen, welcome and thank you for joining us to the NZX's 2020 annual shareholder meeting. My name is James Miller and I'm the chair of NZX. On behalf of your directors, the chief executive, our leadership team, and all the people at NZX, a very warm welcome to our shareholders online or on the phone. This may be our 17th annual meeting for NZX, but it is also our first, and in my view, hopefully the last fully virtual meeting. Shareholders will be able to cast their vote online using an electronic voting card received when your registration is validated using your shareholder or proxy number. Please refer to the virtual meeting online portal guide or contact the team at link on 0800 200 220 if you require any assistance. Shareholders participating online through the virtual meeting website will be able to ask questions. I encourage shareholders who have questions relating to the business of the meeting to send their questions through as soon as possible. Please note that only shareholders, proxy holders, or shareholder company representatives may vote. I do ask for your patience through the course of the online meeting. With the restrictions currently in place around COVID-19, all of us, including your board, are logged in from different locations here in New Zealand and offshore. We're very much reliant on the technology we have to hand, so that means the audio and video quality may be a bit variable without the usual specialists broadcasting our webcast. Before we kick off today, let me give you some insights on what's happening right now in large-scale corporates that are listed on the New Zealand Exchange. Firstly, the phone has stopped ringing for many businesses. Sales have dried up, creating an income sheet crisis, thereby significantly damaging their balance sheets. Secondly, the boards and management of these companies are responding with extremely tight control of OPEX and CAPEX. Thirdly, over the last few weeks, these companies have been locking in liquidity and new debt lines with their banks to fix the debt side of the balance sheet. Finally, and very relevant to NZX, we believe the next step for these companies is to recapitalize the equity side and repair the balance sheets, which means we expect to see secondary issuance coming to market, as happened post the global financial crisis. We've taken a pragmatic and facilitative approach to dealing with the current market volatility and financial challenges being faced by our listed issuers and market participants. NZX regulation has led the collaborative efforts with the FMA and the Takeovers Panel, granting class relief to enable increased capacity for issuers to raise equity to support the working capital needs, allow issuers to use offer types not previously used in the New Zealand market, but which are particularly effective in periods of market volatility. And we have removed procedural and timing requirements that might otherwise have proved a barrier to accessing much needed capital, or being a distraction for issuers focusing on supporting their people and their ongoing businesses. The work we have been progressing to make direct listings a more efficient and cost-effective option could also have benefits in time. My one ask, my plea today to everyone across the New Zealand capital markets ecosystem, the institutions, the stockbrokers, the retail clients, the lawyers, the equity capital market teams, the regulators, including NZX, is to put aside our natural competitive instincts and work collaboratively and cooperatively to get the deals done. What is happening in front of us is too urgent and too important for rivalry to hold us back. We all pulled together during the GFC and we can do it again now. This is an absolute priority. Now to the introductions. I'm pleased to introduce to you the NZX board. Frank Aldridge.
Good morning.
Nigel Babbage.
Good morning from Christchurch.
Richard Bodman. Elaine Campbell. John McMahon.
Morning from sunny Sydney.
And Lindsay Wright.
Good morning from Hong Kong. Good morning from Hong Kong.
We have also welcomed Hayley Buckley as our future director for 2020.
Good morning.
Also online with us are our company secretary, Hamish McDonald, our CEO, Mark Peterson, and our CFO, Graham Law. I'm pleased to confirm that we have a quorum and therefore declare the 2020 annual shareholder meeting of NZX open. Reflecting on 2019 for a moment, the results released in February showed encouraging earnings growth assisted by a stellar performance from our local market. Our board declared a final dividend of 3.1 cents per share, which was paid to shareholders on the 20th of March, taking the FY 2019 dividend to 6.1 cents per share, fully imputed. We delivered record operating earnings of 31.4 million and made a significant progress on our long-term goal to become a more vibrant and diverse capital raising centre as part of the New Zealand capital markets ecosystem. We also continued to develop additional options for future growth. We have also kept an unwavering focus on costs, in line with the commitment made to shareholders at last year's annual general meeting. This has supported a positive lift and operating margins. You'll see a few photos on the screen from our 150th anniversary events. I want to make a few comments on the celebration of this milestone. Not because of the past century and a half, but because of the significance for now and the future. In commemorating the foundation of NZX at events across the country and engaging with contributors to produce the 150th anniversary commemorative book called Stories of the Marketplace, what was really clear to me is the level of endorsement of the vital importance of capital formation in New Zealand and the role played by NZX. We take an intergenerational view of the New Zealand capital markets and the NZX. This extends well beyond our business operations to the many linked parts of our capital markets ecosystem. This has never been more important than today. Healthy capital markets deliver mutual benefits for participants and investors and for our country as an integral component of a well-functioning, sustainable economy. Last year saw the release of the Capital Markets 2029 report, an industry developed blueprint outlining a 10-year vision and strategy to grow the New Zealand capital markets that has the support of the FMA. The report outlines 42 recommendations and provides alignment on what needs to be done. The next important phase of the Capital Markets 2029 is to ensure steady progress in implementing a broad range of recommendations from the report. This will keep our capital markets healthy, driving industry, infrastructure, and moving our country forward. First-class regulation is a central tenet of healthy and well-functioning capital markets. Today, we're announcing a fundamental change to NZX's regulatory function that will separate from the exchange commercial and regulatory roles. From your perspective, as a shareholder of NZX, this model will enable your board increased capacity to focus on the New Zealand NZX's commercial mandate and initiatives to deliver shareholder value. The proposal we're announcing is groundbreaking in the 150-year history of the New Zealand capital markets, aligned to global best practice in terms of structure, governance, and operating model for NZX regulation. Our recommendation came out of a full review of the NZX regulatory operating model, which was prompted by the increased complexity of the governance arrangements we have in place. The board is proposing to adopt a new regulatory operating and governance model similar to the models used by a number of international exchanges, such as the Singapore Stock Exchange. A wholly owned operating subsidiary of NZX will perform all frontline regulatory functions in support of the NZX's obligation as a market operator and an operator of a designated settlement system. The proposed entity will be structurally separate from NZX's commercial and operating activities, governed by a separate board with an independent chair and the majority of the members independent of the NZX's group. NZX is targeting the new entity to operate on a cost-neutral basis. It will not be expected to generate a profit for the exchange. As part of today's announcement, we have named the Establishment Board, chaired by Trevor James, along with Elaine Campbell and Mike Heron, QC, with a fourth member still to be confirmed. We believe the proposal and the calibre of the Establishment Board give a good sense of the significance of the change as a positive evolution of NZX and their role in the New Zealand capital markets. Implementation of the proposed model requires amendments to be made to NZX's market rules, as well as the designation order in place for the NZX's clearing and settlement system. So there is plenty of work to do. We are working towards implementation as soon as possible this calendar year. However, with the current period under Alert Level 4 restrictions, there is likely to be a delay of several months with NZX's regulation continuing under the status quo exactly as they are now to provide full regulatory services in support of NZX's listed markets. This delay reflects the additional pressures on issuers and broader market participants along with the NZX's regulatory team due to the current market volatility. This is a fundamental change to the new regulatory operating and governance model. So I want to acknowledge the positive engagement we've had from the Financial Markets Authority and the Reserve Bank. I'm also grateful to Elaine Campbell for her hard work and expertise she's applied to the development of this proposal. Finally, we would not have this proposal on the table without the outstanding work and effort over a number of years of our Head of Supervision, Joost van Amersfoort, together with the support of the wider NZX regulation team. This is a strong platform for a seamless transition for the issuer and participant customers. Turning to FY 2020 earnings guidance. As we announced at our results in mid-February, we have a strong base for FY 2020 with operating earnings expected to be in the range of 30 to 33.5 million, subject to market outcomes. A lot has changed over the past 6 weeks, and in a moment, Mark Peterson will provide detail on how well our business is tracking. In particular, I'd like to highlight the record trading volumes achieved during this period. There is, however, an increased level of uncertainty. This means, while we're confirming today that currently our earning guidance remains unchanged at this time, we are now formally adding an additional proviso that our reforecast indicates a much wider range of potential market outcomes for the 2020 financial results, particularly with respect to market capitalisation, total capital raise, secondary market trading value, and derivatives volumes traded, and growth of funds under management and funds under administration. I will now hand over to our Chief Executive, Mark Peterson.
Kia ora koutou katoa. Good morning, ladies and gentlemen, and thank you for joining us. My name is Mark Peterson, and I am the Chief Executive of NZX. I am very pleased to address you today. It is great to have our leadership team online with us today. I would like to mention Sarah Minhinnick, who has also joined recently as our Head of Issuer Relationships. It's wonderful to have another experienced and highly motivated leader on our leadership team, who shares our vision to grow New Zealand's capital markets. This role spearheads our efforts around attracting new listings and supporting current listed companies accessing New Zealand's equity, debt and funds markets. Even in these extraordinary times, while difficult, new listed products remains a core strategic focus. However, we must also support our existing issuers as they work through the impacts of COVID-19 to help them ensure the financial stability of their businesses. Over the past 3 years, we've been focused on delivering on the clear goals set out in our strategy. To say that we've had a jolt recently is an enormous understatement. COVID-19 has taken us into uncharted waters. This virus is testing the resilience of our markets, throwing huge tasks in front of our issuers and the New Zealand economy generally. It is also asking questions of us as employers, leaders, and people. I'm pleased to say that from NZX's perspective, while this has been a time of uncertainty and huge demand on the team, we have been able to keep operations running smoothly while handling record levels of activity. We have seen the ability of our people to adapt and find new ways of working, and we have quickly flexed to this as the new normal. Following the government's announcements on COVID-19 alert levels, we have confirmed that the capital markets as an essential service to New Zealand will remain fully operational. As with many of our capital markets participants, at NZX we have been operating in a split team mode over recent weeks. Trading and settlement of all activity has performed well, including under the pressure of very heavy trading. We have effectively traded 4 months worth of traded value in the first 3 months of 2020, with the number of trades up more than 160%. We have communicated our business continuity status with all participants, issuers and regulators in recent days, and assured stakeholders that we expect to be able to perform all essential functions, even with the alert level in New Zealand at the maximum level 4. We have split our core markets operational, technology and regulation teams with cohorts rotating weekly from home and work, and all others working remotely. This means we have limited the physical contact, which reduces the risk of cross-transmission between the teams or spread into the community. We've also been impressed by the level of preparedness of participants and the wider capital markets community. The levels of communication, connection and engagement across the market, including the regulators, has been excellent. All of us are continuing to closely monitor and follow government and ministry health advice. Returning to our performance in 2019 and a brief recap on those key deliverables of our plan. All of our goals in 2019 were driven by a strategic reset 3 years ago, when we committed to creating a more robust NZX to deliver improved results and shareholder value over the long term, and in turn, greater value for our customers and for New Zealand. Our results in 2019 are the evidence that our changes are delivering gains. We have demonstrated the benefit of refocusing on core business, building deeper relationships with our customers, simplifying listing and capital raising, and creating additional options for ongoing growth. Looking at the numbers, operating earnings from continuing activity of 31.4 million was up 9.8% on 18, with operating margin improving to 45.1%. Revenue growth has come from across all areas of our business: core markets, funds management, and wealth technologies. Costs have been carefully managed and remain a key focus. We've had a focus on creating operating leverage in our core markets business while investing in our growth areas of funds and wealth technologies. Capital expenditure has largely been directed into our upgrade of NZX's trading system and wealth technologies. The new trading system, scheduled to go live in mid-2020, will be delayed as we focus on absolutely essential activity in the context of COVID-19, but we look forward to this coming on stream in due course to assist on market liquidity with the delivery of NZX's midpoint order book. We continue to invest in NZX Wealth Technologies to transition new customers onto our platform, and that work will continue. Looking at the achievements of our core business through 2019, one of the standouts was the total value of capital raised, up 9.2 billion to 18.7 billion, driven heavily by growth in the number and value of retail and wholesale debt listings, along with secondary equity debt and fund issuance. We see liquidity as a primary measure of market integrity and price transparency, so it was positive to have on-market trading up 5.3% for the year to 54.3%. This trend has continued into Q1, where on-market trading now exceeds 57%. Adding participants and lifting access to the markets has always been a focus, and we welcome Sharesies as a trading and clearing participant in the middle of 2019, highlighting how technology is also breaking down some of the traditional barriers to investment and helping attract a new generation of investors. We also welcomed BNP Paribas Securities as an accredited depository participant, the first global custodian to join NZX Clearing's depository since it was founded in 2010. This is reflected in a 383% increase in our assets held in the depository to nearly 3.5 billion at the end of 2019. Our dairy derivatives business has been the fastest growing globally of its type, setting growth records over the last few years. However, the lack of price volatility in the underlying physical market saw a relatively soft second half. With volatility coming back in the first quarter of 2020, this has triggered higher levels of growth back into our derivatives market, and first quarter growth was approximately 30%. Energy consulting and development revenues lifted through 2019 to more than $1 million, with the completion of some significant one-off contracts for New Zealand's Electricity Authority. We have also announced a cooperation agreement with the European Energy Exchange with the aim of securing new opportunities in the New Zealand carbon market. Data and insights revenue increased 10.4% to 12.8 million, with an ongoing focus on complementing royalties from terminals with the additional subscription and license revenue. The provision of market information and data remains an important opportunity for us. Smart Shares had a very strong year. Funds under management increased to 3.97 billion, growth of 36% over 2019. Our efforts focused on lifting sales across our product range and launching innovative products, which includes the launch of the Pacific Island series, our iwi superannuation products, and a range of ESG-related ETFs, alongside improving efficiency, scalability, and capability within the team. We achieved excellent progress across all these areas. Within wealth technologies, our funds under administration grew strongly to 2.3 billion, up 15.6% for the year. But more importantly, we announced further customer wins with Hobson Wealth Partners, Saturn Advice, and one other unnamed client selecting our market-leading platform. We also continue to work alongside our existing customer, Craig's Investment Partners. Transitioning their clients onto our platform through 2020 is a major focus of the team, and work continues on these projects despite the environment we face. As the Chair mentioned, NZX actively supported the Independent Capital Markets 2029 review, and we believe the resulting recommendations will assist market efficiency and result in better long-term investment outcomes. This created a 10-year vision and growth agenda that will develop more opportunities for Kiwis and New Zealand businesses. We have also had a sharp focus on further capital markets development. During the year, we contributed extensively to reform discussions around the settings for capital markets. These included sustainable financing, the Overseas Investment Act, KiwiSaver default provider settings, and banking capital adequacy. Right now, there is an important role for capital markets ecosystem to play. At NZX, along with focusing on the well-being of our people and the resilience of our business, we've been doing everything we can to support our issuers to achieve balance sheet strength. You may have seen some of the support measures we have put in place, designed to address the unprecedented impacts arising from the spread of COVID-19 and the challenges being experienced by issuers and other capital markets participants. Over recent days, our regulation team announced 3 separate sets of class waivers that offer greater flexibility to issuers in this current environment. The first was to allow a lift in equity capital raising capacity via placements and share purchase plans. The second was to allow greater flexibility in the timeframes for financial reporting for debt, equity, and fund issuers. And the third was to make available to the New Zealand market the accelerated, non-renounceable entitlement offer structure, and to enable downside price protection to be a feature of certain offers to retail investors, given the market volatility being experienced. It is clear that there are constraints on some issuers' reporting timeframes and working capital positions. And therefore at NZX, we want to do everything we can to ensure Kiwi companies can access equity or debt capital quickly in order to protect their businesses and save jobs. The impacts of COVID-19 are being felt in real time. To help, we have been in constant contact with issuers, participants, investment banks, and other corporate advisors to understand the current situation and environment they face and determine what we can do to assist. Currently across our business, we are seeing heavy trading and clearing volumes. We are also seeing a big lift in the activity from our dairy derivatives market. Most of the equity, debt, and fund listings are on ice at present. However, we are hearing there is likely to be a round of equity capital raising for a number of businesses as a result of the environment our companies now face. Our views on our data and energy businesses have not changed in 2020. Our Smart Shares business has been impacted through the fall in market valuations, and we are seeing significant switching between funds. Smart Shares revenue may well be less than we had planned, and as a result, we will spend less than we planned in the discretionary areas of product development, branding, and marketing. As previously stated, our Wealth Technologies client transition activities continue as planned. In this environment, we are managing our costs particularly carefully. Discretionary spending has been reduced and many of our projects have been paused. We do have a strong balance sheet due to the strategic changes we made in 2018 with the implementation of the mutualised default fund and the issuance of the subordinated note, alongside the cash balances and unused liquidity facilities we have in place. While the outcomes of COVID-19 pose increased variability of outcomes, we do feel well positioned going into these uncertain times. Finally, let me express my thanks and confidence in our team at NZX. These unprecedented times are where we see the payback from the investment we have made in building a quality organisation with the right culture and people focused in the right areas, capable of delivering our future plans. This gives us depth and the organisational capability to be fast on our feet, seizing the opportunities and dealing with the risks and challenges that are thrown at us along the way. That's going to be important in the coming weeks and months. Before I hand back to James, thank you, our owners, for your strong support and confidence in NZX. I look forward to updating you at the half-year results in August. Stay healthy and look after each other. He waka eke noa. We are all in this together. Thank you.
We'll now move on to the formal business of the day. All items of business are ordinary resolutions and are required to be passed by a simple majority, being more than 50% of the eligible votes cast. The resolutions that we'll be voting on today are as follows. Resolution 1, auditors' fees. Resolution 2, election of John McMahon as a director of NZX. Resolution 3, re-election of Richard Bodman as a director of NZX. Resolution 4, re-election of Frank Aldridge as a director of NZX. As stated in the voting proxy form, all voting at today's meeting will be by way of a poll, and accordingly, in my capacity as chair, I require a poll to be held for each of the resolutions. Shareholders on Link's virtual meeting platform will be able to cast their vote using the electronic voting card received when online registration is validated. Voting will be open until the close of the meeting. Please refer to the virtual meeting portal guide or use the helpline 0800 200 220. To vote, you'll need to click Get Voting Card within the online meeting platform. You'll be asked to enter your shareholder or proxy number to validate. Please then mark your voting card in the way you wish to vote by clicking for, against, or abstain on the voting card. Once you have made your selection, please click Submit Vote on the bottom of the card to lodge your vote. Voting will remain open until 5 minutes after the conclusion of the meeting, and the results of the vote will be announced via the market announcement on nzx.com. Your board supports each of the resolutions and intends to vote undirected proxies in favour of these 4 resolutions. I will now introduce each of the resolutions in turn for discussion. Resolution 1 relates to the board being authorised to fix the fees and expenses of KPMG as the company auditor for the 2020 financial year. KPMG as the current auditor of NZX. I move as an ordinary resolution that the board be authorised to determine the auditor's fees and expenses for the 2020 financial year. Is there any discussion on this resolution?
There are no questions on this resolution.
Thank you. There appears to be no discussion. Resolution 2 relates to the election of John McMahon. Under our Constitution and the listing rules, any person who is appointed as a director must retire from office at the annual meeting, but shall be eligible for election at that meeting. John McMahon was appointed to the board in June 2019. John retires in accordance with the Constitution and offers himself for election. The board recommends John McMahon to you as a director of NZX and unanimously supports his election. I invite John to address the meeting on his proposed election.
Good morning. The framework I use for assessing a director has three main characteristics. First is domain or
Just give me the
industry knowledge.
Yeah. Tell me
and
when.
expertise. Second is commercial experience, that ability to make a dollar. And lastly is what's someone's motivation to be involved. On domain knowledge, I'll take my bio as read. It was in the notes to the meeting. I note NZX has a diverse range of business operations, and consequently the breadth of domain knowledge required is extensive. I have either directly worked in or been involved in businesses that encompass almost all of NZX's operations, so I do understand the economics and nuances of how they work. Now, on the matter of commercial experience, that's clearly a harder one to quantify. However, I have been involved in successful business turnarounds, and as an analyst, I've seen the economics and critical success factors for many business models. Lastly is motivation. Why am I doing this? Well, around 2/3 of my working career was spent in capital markets, and I've seen the industry develop and change extensively. There is significant further progress that can be made to improve New Zealand's capital market settings and infrastructure, and NZX is an integral part of making that happen. My motivation is wanting to see NZX succeed and helping drive capital markets progress. Thank you.
Thank you, John. I move as an ordinary resolution that John McMahon be elected as a director. Is there any discussion on this resolution?
I confirm we've received no questions in respect of this resolution.
There appears to be no discussion. Resolution 3 relates to the re-election of Richard Bodman. Richard Bodman was appointed a director of NZX in April 2017. Richard retires by rotation in accordance with the listing rules and offers himself for re-election. The board recommends Richard Bodman to you as a director of NZX and unanimously supports his re-election. Being eligible, Richard has confirmed he is available for re-election. I invite Richard to address the meeting on his proposed re-election.
Good morning, my name is Richard Bodman. Today I offer myself for re-election by shareholders. I've enjoyed the opportunity to serve on your behalf since 2017. If re-elected, I will continue to discharge my obligations with due care, consideration and attention, always in the best interests of NZX and shareholders. Recent years have seen change at NZX with Mark Peterson as CEO and a strategy reset shaped to deliver positive outcomes for shareholders. A good deal of progress has been made. However, focus is very much on the go forward. NZX must be adaptable, build on what has been achieved, execute well, and consistently deliver for shareholders. I've been chair of the clearing committee and remain a member of that forum. I serve on the audit and risk and conflicts committees. I led a cost review on behalf of the board last year. I've helped to improve the governance of the Wealth Technologies business and chair that subsidiary. Having a well-regulated, well-run and successful NZX is vitally important to the markets and to investors. After all, investment plays an important role in all our lives, be that now or in the future. Thank you.
Thank you, Richard. I move as an ordinary resolution that Richard Bodman be re-elected as a director. Is there any discussion on this resolution?
I confirm that we have received no questions in respect of this resolution.
There appears to be no discussion. Resolution 4 relates to the re-election of Frank Aldridge. Frank Aldridge was appointed a director of NZX in May 2017. Frank retires by rotation in accordance with the listing rules and offers himself for re-election. The board recommends Frank Aldridge to you as a director of NZX and unanimously supports his re-election. Being eligible, Frank has confirmed he is available for re-election. I invite Frank to address the meeting on his proposed re-election.
Morning, everyone. I'm pleased to put myself up for re-election to the board of the NZX. I've been involved in New Zealand capital markets for 25 years, as well as in Australia, and can bring a depth of experience through my role as Managing Director of Craig's Investment Partners and Chair of Wilson's Advisory and Stockbroking in Australia. As James and Mark have alluded to, the NZX is at the heart of capital markets, and there's no other time than what we need: a strong board and management team, which we have led by James and Mark, to help facilitate capital for those that may require it now and in the future. I'm currently chair of the Remuneration Committee, a member of the Nominations Committee, and a previous member of the Audit and Risk Committee. Working with the industry, I'm well aware of our regulatory obligations and the changing landscape of financial services in New Zealand. I thank you for your support, and if re-elected, look forward to working with all stakeholders over the coming period through these trying times. Thank you, and stay safe.
Thank you, Frank. I move as an ordinary resolution that Frank Aldridge be re-elected as a director. Is there any discussion on this resolution?
I confirm we've received no questions on this resolution.
There appears to be no discussion. We'll now turn to voting for the shareholders who have not already cast a postal or proxy vote. Shareholders should now submit their votes, select for, against, or abstain along each resolution. Voting will be open until the close of the meeting. Once all the votes have been cast, they will be counted by the company's share registrar, Link Market Services, and scrutinised by the company's auditors. The result of today's meeting will be released to the market on completion of verification of voting. Please complete your voting while we take questions. At this point, we'll open up to any questions on the financial results, the business update, and any other matters you would like to raise. Are there any items of general business to be discussed?
We've received one question in advance of the meeting, which I'll ask Mark Peterson to address now.
This question comes in from David Reed, and the question reads, Why was it necessary to send Ms. Jones to Singapore? Ms. Jones is not listed as one of the leadership team. Knowledge of the tech industry should equip Ms. Jones with the ability to video conference. Accommodation, airfares, meals were a cost. Was there a benefit report provided? The simple answer to this question is Julia leads our dairy insights business, amongst other things, and she has deep experience in the dairy market. Each year, we provide a deep dive report into the dairy market, and we present that at our annual conference for dairy, our global dairy business in Singapore. Julia was doing two things up there. One was a key presenter at the conference, and the second thing, she was leading the selling efforts of that dairy report. Just to give some context, our dairy subscriptions earn us $737,000 last year, and the contribution supports our dairy derivatives business, which earns us $1.5 million. Thank you.
We haven't received any other questions.
For discussion. This brings the meeting to a close. Ladies and gentlemen, that brings us to the end of the formal business of NZX's 2020 annual shareholder meeting. Once again, it is wonderful to have your support as the owners of NZX. A few final messages for you to take away today. As NZX companies recapitalise their balance sheets in the coming weeks and months, the one thing I ask for everyone in the capital markets to work constructively and collegially together. We've announced the separation of the exchange's commercial and regulatory roles. This brings us into line with international standards and also enables a sharper focus on long-term shareholder value. 2020 earnings guidance remains unchanged, but we've added an additional proviso around the heightened uncertainty in the external environment. I would also like to take this opportunity to say how incredibly proud of the team in ensuring the markets have operated smoothly through these difficult times. The environment is challenging for everyone, and I understand the increased pressure on our team at NZX and how that's been felt across their wider families, given the remote working environment we currently face. The focus and dedication has been nothing short of exemplary. Thank you.